How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on gold versus US dollar, and we're going to start off here looking at the DXY. So in recent time, we can see that we have a dramatic sell-off occurring here. Now, was I anticipating price to sell off this fast? Not necessarily. I did say it could happen. There are moments and times when trading, you'll see tear-offs like this or run-ups like this. Right now, we're watching and observing, living through some history right now. Not saying it's important history, but history data that has formed, it's quickly selling off, right? There's huge distribution going on here. Decline and weakness in the dollar. We took out the 20-day low, we took out the 40-day low, and we took out the 60-day low. Is that random? Look at how IPTA showed us the significant swing points where price is most likely going to target. Now, many people have asked me what happens once price takes out all of the IPTA sell side or buy side. So people will mainly ask you something like, oh, it just took out the 60-day low, which is potentially the lowest low of the last 60 days from July 3rd. What is going to happen? A reversal? I don't know. I just have to follow the price action. However, maybe something on the higher time frame, like a higher time frame PD array, may suggest, oh, we're trading down into a discount PD array, maybe a bullish order block, right? Or a bullish mitigation block, or a bullish breaker, something along, or a volume imbalance, something along the lines of that to give us the scenario that we're going to get back up into this. I do believe we will trade back into this. Now, do I know when it's going to occur? No. The only way I'm going to know that it's going to occur once price purges buy side. So you can see all the swing highs. Just a quick note. All these swing highs, mark it in red. All these swing highs. Have you seen a previous daily high rated yet in the last week and a couple days right now? No, you have not. You've just seen the lows get rated. They're smashing through the swing lows. They're smashing through the lows. There's clear signs of the market makers telling you, yo, I'm going to sell. I'm not going back up to buy side. But if we ever get a chance where price comes down, takes out sell side, and then runs back up to buy side, that might be the opportunity that price may give a turning point. And then we might be able to see a fill back into this liquidity void, or all these SIBIs that we have going down, or fair value gaps, tomato, going down. We probably run into some type of order block theory there and then go short again. But as of right now, just because price did not get up to that 20-day high as well, another question, people think that, oh, it's not going to be feasible. No, you have to follow the money. Follow where money is going. It only gave us the ran on this and then ran back down. That was all I needed to know, that the dollar was going to most likely go shorter. That was it. I didn't need for price to get to the 20-day high. We're just or the 40-day high, if anything, because they're relatively close, equal highs. Doesn't need to get there. The commercials, the algorithm, the market makers may have something intended otherwise. The scenario that I have in my head is not the scenario that the market makers have. But I'm trying to get on board and try to think, okay, if I was the market maker, where would I run stops? And what would I do? And what is the macros telling me? Like I said, I was using the macros. July most likely was going to give us some type of bearish drop. It was showing a rally, then drop. Don't take the seasonal charts face value, because many people were telling me, oh, I see gold running up for the rest of the year. That's not how it's going to play out. Sometimes it does. Don't get me wrong. Because there was a time, I think it was like 2021, US oil, bullish, very bullish, right? Was running up every single month, January, February, March, April, May, June, July, bullish. I think it was 2021. I'm not sure which year. Don't quote me on that. But it was one of the years, probably towards the end of the year. It was super bullish. Then going into 2022, I think, it continued to go up. That's when we saw gas prices go crazy. And it's continued to turn into a super bullish trend and turn into a mega trade potentially. Here, we got that decline. We don't need the 20-day high to be broken because it just needed this. That was the sponsorship rating the buy stops here. Right here. Buy stops rated, sell off. Same thing vice versa when we're looking at gold. So right now, just to keep you up to date. So ever since we caught those longs by that buy limit and buy stop order, because there was a down close candle, yes, we did not buy in a discount because I was waiting for more information. Could I have found a way to buy down here? Yes. But I needed more context. And the reason why I needed more context is because I said I wanted to see a swing high broken, then a higher swing low. We got this swing high, 1, 2, 3. Well, technically, I did have a swing high broken. I didn't even see it myself. Now, see, there was a swing high broken here, and there goes your higher swing low. So that was my fault for not paying attention. This was the higher swing. I should have been able to buy on these 2 down days to get a cheaper price buy. However, I got one here because I knew that if it was a down day, price was probably going to explode to the upside, take out this swing high, run into 1950 algorithmic level, and then potentially run up to 1980. We're still threading around these equal highs right here. I still want price to get up there. Will a pullback be expected? Potentially. Sooner or later, I think price will give us a small pullback, and then we're going to go higher. Now, when it comes to DXY, there's something else I like to use in my analysis. I want to show you guys here. So it is our yields. So what you're looking at here is the 2-year U.S. government bond yields. And right now on the daily, on one of my social medias, I think it was like IG or something, I posted this decline in the 2-year, and I was like, wow, this is a huge decline that we haven't seen in a long time in the yields. It was a massive drop. And when this did that massive drop, dollar as well fell with it. And as we've seen recently, as the yield started to make a recover on this liquidity void or SIBI, we saw dollar rally as well. But as soon as we got up here, dollar was ready to tank. It took out the buy side here and then immediately reverted back down to sell side. So this was the purge. The purge was on buy side. And then the revert was back on sell side because I could see the quick repricing. Price is coming up and quickly repricing back down. After taking out a swing high, it immediately takes out a swing low. Does that mean price action is going to be bearish? Possibly. But does it mean that price action could also be doing a sell stop raid, just running the sell stops just to run higher? That is another scenario. You can't be super optimistic in one scenario. Think about how things may unfold. Many people are so one-dimensional when trading. Super optimistic. Oh, dollar's bullish, that's it. But how do you know for sure? You don't know for sure unless the next couple of weeks come up and then it finally plays out and you're like, oh, wow, I was actually right. But if you were actually wrong, you'd be like, dang it, you're going to beat yourself up about it. Keep your options open. But definitely take a stance and look for the confirmations. And I talked about this in my daily draw video on the channel. Daily draw video is probably the most underrated technique that any trader should be looking into. Very underrated, but nobody realizes how it is to find the draw. It is so simple to find a daily draw. But however, people confuse themselves because they think buying and selling pressure matter. They think the CPI news matter. They think the NFP news matters. They think all those things matter when it does not at all. They think the retail triangle pattern, ABCD, whatever, garbage, nonsense. Haven't said that in a while, but it's nonsense. It is nonsense what I see traders trading in the trading community. Purge, revert. That's it. That's the 2-year bond. Now, if it's going to continue going shorter, it's going to target what? Swing lows. Now, there are many other swing lows I could have marked off here, but I'm not going to mark off every single one. But look at the swing lows right there. Now, many people keep asking me, how do you mark off swing lows? Look at my chart and see what a swing low is. The low is literally in between 2 candles, and it's lower than it. The low on the left is higher, and the low on the right is higher. That's your swing low. That question is a little redundant, and I'm trying to really sink that into a lot of people's heads. But if you watch that daily draw video on my channel, all of that should go away. If you have any further questions on that, please don't be shy to DM me. I respond to almost everybody. I get hundreds of messages every day. I try my best to respond to them. Swing low is going to get target if it's going to go bearish. Same thing, 5-year government bonds. Look at that. The yield ran up, swept the swing high, immediate repricing. Purge, revert right back down to sell side. Takes out a swing low. There's a swing low here as well, but I didn't mark it off. But that's a swing low as well. Immediate repricing. Now, if it's going to keep going lower, what is it going to do? It's target sell side. All the sell side. You can see all this is relatively equal lows as well. Now, what is happening here? You can see it is trending up slightly, but in the phase of what? Most likely consolidation. Look at how it's accumulating orders. It's not making a significant move up like this. You see how this leg is going up? It's not doing the same thing here. Something is happening here. Accumulation. Market makers are building up buy sentiment and sell sentiment. Retail traders are coming in and trying to speculate, okay, is this market going to pop to the upside or is this market going to pop to the downside? That's what they're doing here. And this, when the market starts doing this, I know that's what retail traders are doing. It's quick and easy to see it because when you go on the forums, you see some people saying, "Oh, I think the 5 year bond is bullish. I think the 5 year bond is bearish," and most likely one side is more favoring buy side or sell side, and you'll see that's the side that either it's going to get ran, and then they're going to be in a lot of pain in the near future because if they didn't take profit, their stops are going to get ran, and that's what's going to happen here. They're going to run the stops. What's below all this sell side? Sell stops, right? Sell side liquidity has sell stops below it because anybody that was profitable on this way up has a stop loss or a trailing stop loss. The market is just going down and triggering all of them, knocking them out, knocking them out, knocking them out. Like I said, does that mean price is going to continue to go short? I don't know, but I'm just following what price action gives me on the day-to-day basis. And I know what the market is comprised of: swing highs and swing lows and inefficiencies. There's nothing else to the market, guys. There's no unicorn pattern. There's no rainbow pattern. There's no cup and handle pattern. There is none of that because that doesn't exist. It doesn't exist. 10-year bond, same thing. What happened with the 10-year? Runs up, hits it quickly. Doesn't run it high like the 5-year, like we saw here. See how it really like spikes up? See here, 10-year. Just all it needs to do is break it. Many people think it needs to break it by like 100 pips. No, it doesn't. Once it crosses that plane of line, now like for those that are in America or that knows American football, once that football gets across that line to get into the end zone, it's a touchdown. That's it. It's done. Once you break the plane, it is already triggered, right? Those stops are most likely triggered. Sometimes some people might get lucky because their stops are a little higher, right? If somebody was selling, their stop might be up here. And they might have been lucky because they didn't spike up and get them. But for others that were probably in the 5-year, let's say if you were trading the 5-year yield, it might have got you. Sometimes whatever stop loss you have it's not too far from what the market can grab. And it did it. It runs all the way up, knocks your stop out. And you're like, dang. And then it drops. And you're like even more upset because you're like, you knew it was going to go short. And that's what you got to live with. And that's the 10-year. Same thing. Takes out a swing low, after taking out that swing high. Same thing here. Quick repricing. We still haven't broken a swing low, so this does concern me a bit. So we got 5-year, 2-year, 10-year all breaking a swing high, then reverting back down to a swing low, but we don't have the 30-year taking out a swing low. So we have like a market triad going on here. So normally ICT I know would say look at the 5, 10, and 30. I'm including the 2-year, something I learned from a fellow trader in Australia. The 2 years, it's more ahead of all the other yields, in my opinion. Tracking this is the closest thing I could track to the dollar, in my opinion. Tracking the 2-year bond rates is the closest thing I could track to the US dollar. So hopefully you guys take that into your arsenal and use it in correlation with the DXY. So when this goes up, dollar goes up because the yield is increasing. Think about that. Interest rates are going up. The yield is increasing. If the feds are going to pivot and say, yo, no more raises of interest rates, yields are going to drop. And we might be hearing signs of that, right? Little whispers of, the Fed, Chairman Powell is not going to raise rates anymore. Federal Reserve Bank of America is not going to increase the rates because they think inflation is slowing down. Whatever the case may be. This is why you got to understand Forex from a full perspective. It can't just be solely price action because it's not just the price action. It's the moving drivers of foreign exchange and yields. The interest rates are the primary driver to foreign exchange. And then you'll notice everything else is intertwined. Stocks, currencies, bonds, commodities, golds, oils. All those things are all intertwined. All the markets are coded all along each other. One goes up, the other one goes down. One go up, the other ones go up. One goes down, the other ones go down. You got to learn these things. Likewise, you see the DXY going down. Just want to peep. UJ. Look at UJ. Look at that drop we got. Look at how quickly. Look at all the swing lows. Look at the monthly open. That's that bearish order block that we were talking about. I was tracking it for the channel. Look at how it breaks into that. Consolidates for a bit. Finally goes down. All right? Swing high here. We don't get that swing high above July's opening price. But we do get a swing high here. And after getting that swing high, we can see we quickly run down and take out, where's the swing low? Swing low right here. 1, 2, 3. We remove all this. That's your swing low. 1, 2, 3. Swing low is ran. No up days, unfortunately. But when you get in conditions like this, right? Normally, if you're trending, let's just say you're not suspecting a pullback, but you're expecting price to continue targeting previous daily lows. All you have to do is simply wait for price to move above midnight opening price, so go up. Because if you're looking at all these down days, essentially these are the opens right here, right? And those wicks is basically price moving up and being green at one point and then coming back down. That's what you notice for most of these daily candles. You have a high point, price comes down. Sometimes the high is the open. What you see for this candle, you don't have any wick because the high is the open. You can see a small wick here. It's close to the open, but you can see there's a small rally up and then a drop down. That's how I would get into the market short if I was not anticipating any more, counter trend candles, or if I was really convinced that the next day was most likely going to raid the previous daily low. If you notice too as well, all the highs are protected here. Look at all the previous daily highs, the start of this rip down. That's a swing high. Let's get this here. That's a swing high. That's a swing high. Notice not a single break in none of these highs. Heavy distribution occurring. Market makers want to protect the highs because they're shorting. They don't want to run their own stops. That's what I'm thinking. I'm not saying that's how it is, but thinking about it from a rational perspective, if I was shorting, why would I want to run it back up? Because I went short. I don't want to run my own stop loss. And I don't know. I'm not sitting here saying that they trade with stop losses because I know their pockets are way deeper that they probably don't even trade with any because they control the market. It's all rigged. But if I had to have a stop loss, why would I run it back up above and knock myself out and then make the price drop? No, I'm going to protect my stop loss. And let's keep shorting the market. And let's take out all the retail traders and large funds stop orders below the lows. That's what I would do. Let's see where UCAD is. Where's UCAD? Just to see what it was doing as well. Look at the decline. See that decline? Same thing, July. Let's look at July real quick. That's the opening price of July. That's the open. Look at how it pulls traders to the wrong side. Purge, revert. Quick revert back down. I would like to see probably price trade back into this. Last up close here. And then price drop down. That's what I would like to see happen within this SIBI here for UCAD. But that's just me quickly looking at it. I'm not trying to break it down for you guys hypercritically. Opening price. Let's get all the retail traders on the wrong side. Let's convince all the sheep, all the people that think retail logic works and buying pressure is a real thing, and then we're going to fade them. There you go. Every time there's a Judas swing. Doesn't matter the time frame. The monthly chart is always going to have some type of Judas swing. The weekly chart is always going to have a Judas swing. The daily chart is going to have some type of Judas swing. Let's go down to use Swissy. What a huge decline. That blue line is a swing low that I marked off on the weekly. It targeted that. Look at that. This is the first official trading day for July. Let's get the opening price here. That's your opening price for the month. Look at how they pull you up real quick. Quick drop. They got you. Open, high, low, and close. Learn that. Hopefully today's video was insightful. Peace.